very, very warm welcome. And as you would expect, we're going to start with Credit Suisse, because the Swiss bank has seen its shares tumble this week, with billions of dollars wiped off its market value over concerns about its finances. So its shares fell by almost a third on Wednesday, at one point forcing the Swiss central bank to actually take action, issuing a statement saying Credit Suisse can borrow up to this much, $54 billion, to boost its bottom line if it needs it. Problems in the banking sector surfaced in the US last week with the collapse of Silicon Valley Bank. The selling continued in Asia today. At one point, Japan's Topix banking index fell by more than 4% after recording its worst day in 3 years earlier in the week. Well, we are now joined by Russ Mould, who's investment director at AJ Bell. For more on this, good morning to you, Russ. We're all waiting with bated breath as to how European markets will start the day off the back of the news that the Swiss central bank is standing by with help if needed. Is it thought this will calm the nerves?
It looks like we're going to get a small positive start to the day, Sally, up between 1% and 2% on most of the major European indices. So that is a good start. But you would have to say that after the scale of some of the losses we've seen over the last 3 or 4 days, it doesn't come close to making up those. So there are clearly still some questions being asked.
Also, as well, I've noted the bookies are predicting Credit Suisse shares will jump something like 18% at the open. But many will say, you know, the phrase in the markets, it's a dead cat bounce. The worry is that there is real weakness across some banks in Europe.
I mean, Credit Suisse has been a poorly run bank for a very long time. So I know when the auditors put out their report this week saying that there were material weakness in its risk controls, that really shouldn't have been a big surprise to anybody. When markets are worried, they always look at the weakest links first, and Credit Suisse is definitely one of those. What the Swiss authorities are trying to do is say, again, to the depositors, you don't need to take your money out. We have your backs. And what they're trying to do there is stop a potential run and stop a potential domino effect.
And also, since 2008, we've all learned a lot of lessons. Central bankers have, governments have. We've seen fast action this time, haven't we? Wouldn't you say, on the part of the UK authorities Monday and overnight in Switzerland?
Yeah, the Americans and the British acted quickly over the Americans quickly over the weekend, the British on Monday, and then the Swiss yesterday and today. I think that was one of the things that caught everybody out in 2008, was that once you let this roll away from you, things go wrong very, very quickly. So I think that this determination to provide those backstops, to make sure that depositors know that they're safe, is a determined effort to avoid some of the mistakes that were made in 2008. Equally, I know there'll be some skeptics out there who say that the origins of this crisis lie in the same origins as 2007 and beyond, which was that actually monetary policy was too low for too long. So the problem isn't the rate at which it's been tightened, but the fact that money was so cheap for so long that risk-taking was encouraged intentionally or otherwise.
Also, the European Central Bank meets in a few hours' time. It was widely expected to raise rates by 0.5% prior to the news about Credit Suisse, etc. Your thoughts on what it might do?
That's now seen as, I think, highly unlikely. They may go for a quarter point, because at the same time as keeping the financial markets happy and the system secure and avoiding a recession, they also still want to combat inflation. So there's a lot of things to juggle there. There is, however, a strong feel that the Federal Reserve in America will not act and keep rates flat next Wednesday, and the Bank of England will do the same next Thursday. Again, not change.
OK, thank you so much, Russ Mould there at AJ Bell.